Hi, everyone. Welcome to the Private Banking Wealth Management Hot Seat. With me, we have Philipp today. Philipp is a partner at Synpulse, and he leads the topic on client engagement and front office enablement. Welcome, Philipp. Glad to have you on board.
Thanks, Prasanna. Pleasure to be here.
And let's get the ball rolling. So to me, probably the most interesting aspect that we could get started with is evolving client needs and changing client expectations. If you can set the scene and the context towards the topic and the frame, and maybe share a bit of what you see that is changing in the market and also changing client needs would be great to hear your thoughts.
Yes, I hope you're prepared for a lengthy answer, but let me make a start, because I think the topic itself, right? Why do we have that topic? Obviously, we see a lot of traction of that in the market, and I've gained the respective experience. But I think the key point here is also it's something that changes very, very quickly. The very quick dynamic that we see change. And as a personal example, I think about 4 years ago, I was very close by here in our office, actually. And I was confronted with that challenge in the sense of, hey, you're all ready to start to deal with digital client engagement, front office enablement, mobile apps, all these topics. But is that even relevant? Have you seen clients changing their banks because of mobile apps, because of how their experience is digitally, of how tech savvy their frontline is? And at that point, I was like, yeah, it always felt like I had to make a case for that. And you know what? That challenge disappeared because it actually started to happen in the market already over the past few years. We're now in a situation where 2/3 of wealth management clients say in some contexts, they prefer a digital tool or to interact with a digital tool than a face-to-face meeting. Typically things like signatures and all that. They don't want to. They want to do that 24/7 and all that. So that's something we see, and I think because it's such a rapidly changing topics, it's also become so important in the market. And obviously we have now the key challenges you mentioned. I see basically a dual challenge, and I will refer to it as a dual challenge because I think we're actually challenged from both sides. On one side, you have this low-touch challenge, right? Because you as a private bank, you suddenly start to get compared with someone you never wanted to get compared with big tech, with social media apps, and you say, no, we're a private bank, we don't do that kind of things. But you're getting compared because your high net worth individual client is using social media, is using these apps, and if you even want to engage digitally, you will automatically have that comparison. So you're suddenly in a situation where you need to be able to do that and do that very, very well as a private bank as well, right? And then on your traditional area, kind of the high touch engagement where you as a private bank and private banker always fared very well, you actually also have a challenge because your frontline, your private bankers, they cannot operate like they operated maybe 10 or 15 years ago. Suddenly, your client comes with much, much more information equipped. Your client is using AI. Your client is using all sorts of information channels and basically expects you as a private bank and as a private bank frontline to top that and to add to that and to give a sense of clarity in all this complexity. And I think this dual challenge is really what we see currently in the market. And maybe on top of that, it's a tough time to receive that dual challenge from a private bank's perspective, because over the past years, obviously, margins in the traditional investment business have come down. And obviously that raises the question, do we have the will, do we have the firepower to react or to act on those on this dual challenge, as I call it?
And following through that, you spoke about the ultra high and the high net worth clientele. So there, the question that normally gets asked is, it's still a high touch business. You need to interact with people, and you need to take the clients out and have conversations. It's complex discussions that you have, and also relationships matter a lot, right? So why can't the banks just sit out, wait for things to actually, someone to implement certain things? Because I think the stickiness probably has been there traditionally. I don't know if it changes in the future with the new generation. So what's the pressing factor that it's so prevalent and important now?
Yeah, it's a very, very good question, and it also relates to that dual challenge, because as a private bank, yes, you need to do high touch very well, as you did in the past, as always. Might be even more difficult for your private bank, everything else they also need to do. But suddenly, you also need to do low touch well, because suddenly your brand is compared to other brands that are already doing that well. And we have data, we have studies that show that 2/3 of private banking clients in specific situations prefer a digital tool over a face-to-face interaction. But of course, only for that specific situation. It might be signature-related, document-related, whatnot, right? But in other contexts, they obviously prefer kind of that high-touch context and the direct interaction. So in the end, you end up being needing to do both very, very well simultaneously. And I think that's something that is a very tough challenge in itself already. Now, you put on that tough dual challenge on top that many private banks are not in the situation anymore maybe they used to be 5-10 years ago, where their main business was still characterized by higher margins. And if you combine all that, that's actually very tricky these days to solve, to also get the investment, get the buy-in, to solve this dual challenge simultaneously with the intention and the focus it deserves.
Understood. And to make it now practical for the institutions that are servicing this segment, could be large universal banks with affluent and a private banking segment, could be pure play private banks. How should they think? Where should they start? How should they invest? What should they invest into? Maybe if you can give some thoughts towards how you see this, the prioritization even shape.
Yeah, let me also here give a bit of a longer answer and also tie back into the previous question on why don't you sit out, or why don't you wait until all these new tools or new ways a private bank to interact with their customer until they become mature, and once it's mature you just take them and use them for your private bank. I think what many of them realize at the moment that they already have a lot of issues with their existing programs. They already are delayed with what they wanted to be when they defined that 3, 4, or 5 years ago as part of their strategy. And if you think about what that means going forward, it means they're actually not catching up. It seems like they're falling even further behind. So if you start then with that aspect of, well, I can probably fast follow, or I can sit it out. What in reality happens is you're falling further behind. And now what that means in terms of where do you need to start is actually, if you realize that, it obviously starts with your strategy, because in the end, your structure will follow your strategy. But if your strategy has no component of client engagement or front office enablement and what that means in the future, you will not be able to get enough momentum to catch up, to change your structure in a way that you can actually be quicker and realize that potential. So I think in terms of the methodology in general, it doesn't change. You start with the strategy, you follow with the structure, and you start to actually do that. But I think the realization that is actually a strategic topic and not just an IT problem, for instance, I think that is what will separate in the future successful private bank from less successful ones.
Understood. And maybe now pivoting to the topic around technology. So there is a lot of positive progress that I think, and possibilities that now come, especially with even things like GenAI in terms of technology and transformation. Where do you see are the biggest opportunities for the players in the market from really adopting some of these things? And where do you see the biggest potential where they should look into investing?
I think on the client engagement side, the biggest opportunity is that you can actually have, and you should have, much more touch points with your clients than you had before, much more frequent. You don't need to wait another month or so until you have the next big meeting and have that high quality, high touch point. But you actually might have that daily, or you have that daily with the team of your client, often surrounded by a team, and that gives you a full new world of how you can interact, of useful data, and also how you're able to process that data for a client's benefit. I think that's one thing, obviously, where it's a big opportunity. And the other big opportunity is also when it comes to the actual value or the actual work your front office is working on. If you see like the compliance hurdle, the operational hurdles, things like notes and all that, that's a lot of non-value tasks that they still had to do on their desk. And I think there's so much potential of actually getting this off and actually focusing more on areas where the technology is not as far yet for you as a private banker, and actually automating the rest. And I think that part, just in general, I think the industry is also lacking behind compared to other industries like commerce or technology industry itself, where we see a lot of these things already being automated.
And could you speak more to some of these emerging trends and how can actually institutions prepare better towards these trends in maybe ensuring that they don't stay behind?
Sure. I mean, there's obviously a lot I could speak about too, but I think I want to pick out two trends specifically. The first trend is the well-being of your client when it comes to everything that surrounds your client digitally. And I think we start to realize that in developed countries, but also all across the world, that some of that interaction we're having with our technology is not only healthy for us, and it starts to get us hooked in, we start to get dependent, and all that, on all those topics. And I think the banks have a unique role to play here, because you as a bank will do better long term if your client is also doing better long term. Your client will be more successful, it will that will help you as well, right? And that's quite different from the role, for instance, a big tech company has. Because big tech company, basically you're monetizing that the client interaction. So the more hooked your client gets, the better for you. And I think as a bank here, you have looking forward, you have a trend where you actually play a different part, but still you need to be able to make it interesting enough that you can compete versus all the hook-ins that are out there in the market. And I think that's this digital or physical well-being part, trend number one, that the banks will much more have to deal with if they want to be successful long term. And the second trend I wanted to pick out for today, I was recently thinking whether there could be something like a Moore's law of banking, right? So I have some past long time ago where I studied physics, and obviously Moore's law has been very close to the work I was doing a long time ago. And I think there might be actually an option where we see a Moore's law of banking emerging. If you think about how all this digital world will help to personalize interactions even more. I mean, think about your social media apps. The way you look at your apps, it will be different from any other one opening that apps because you have different content, etc. And I think what that basically means is, from outside, from a client perspective, there will be more and more segments because for each client there will be a different service supported by technology. And if you think about that even stronger, those amounts of segments will grow until finally you're your own segment as a client. And I think that might be a Moore's law of banking, that this number of external client segments will double every 18 months. And let's see whether this comes true. Of course, internally as a bank, you still need to organize yourself, so you will still have some sort of segmentation based on net worth, etc., as you do today. But I think from an external view, we might actually see that coming to effect in the next years. And let's see whether that prediction will be correct.
It's super interesting, the mention of Moore's law. And honestly, I was also having a few other conversations, and segmentation as a topic is going to get more and more interesting in the future, especially if you even in terms of things that I've been hearing and also observing. If you look at the mass affluent as a segment, you have more and more people that want to get into wealth and investment side of things. So if you look at wealth management, coming from a retail to wealth, would have a different attractiveness, different needs, different types of digital needs versus even human touch. And you then go through the entire chain where we speak about, financial planning, you speak about many other aspects. Then you go to a private bank. Then you speak about internationally served private banking client with one relationship manager that is able to manage money across the board, right? So to me, it's super interesting to understand how do we cater to the segment from a digital, high touch, low touch service model and operating model. So to me, this probably is going to manifest itself in multiple ways. To me, I'm quite curious to understand how are the different institutions, depending on what their current focus is and where they want to go, are going to react towards the opportunity. Excellent. Cool. And are there any other interesting aspects as a part of what you're looking into that is worthwhile for you to highlight?
I think, Prasanna, there are actually too many. And I know we're always on the clock, but obviously I'm very happy to have that conversation with, whoever's interested in the audience to actually speak about what else is actually coming. But I think, let me end with the tools I picked up for today, and I can assure you there are many others that we have that we're thinking about, and we see also a lot of data that start basically to evolve or to show us where other of these trends are. I think the whole topic. Yeah, let me not get started. We have a few other video casts coming up dealing with these as well. But
Excellent.
I think let's end it at.
Philipp, was a great pleasure. Thanks a lot for sharing your insights and also for making time. And towards the audience, if you have, please let us know if there are, hope you enjoyed the conversation. And if there is any feedback, specific topics and specific viewpoints that you have, please also share with us. And we look forward to the next one, next video series that we can establish for you. Thanks a lot.